Everybody talks about it every year, right? Sell in May and go away. And I don't know whether it's true this year or whether we should be believing it other years. The Dow is, got off to a good start earlier today, but now struggling so far. Midday trading, we're down by 93 points, 17,007, almost 17,800. Bob Wiedemer with us, been calling for a crash for a while. So what are we to make of this? We haven't seen a crash yet. I don't want, I feel sensitive in mentioning that, Bob, that I would say, wait, I want to maybe should have built up to that a little more before I say, hey, you called for a crash and we haven't seen it. So
yeah, thanks for that opening. Actually, we have seen two crashes. I mean, we saw quite the decline in the before September and October. We also saw a huge decline this year, January, one of the worst Januaries ever.
Yeah,
what
not
you
really
really
a crash. I mean, not to be.
January was pretty significant, but you're right, we've come back up.
Right.
What I think is the real issue is take a step back, and you see this market hasn't moved anywhere since December 31st, 2014. I mean, it hasn't gone anywhere. That's unusual that it's flat. To me, that's that lack of government, Federal Reserve money printing having its effect. And that's why I think that without money printing, you are going to see this market crash and stay down. Again, obviously, it's made two pretty big dives, if you don't want to call them crashes, corrections, major corrections. But I would say that without that money printing, you are still in for a crash.
I think there's a case there's a case being made, I'll put it that way, that we're ready for it, that we're ready for the rate hikes to begin. For example, Alison Rivlin, who used to be with the Federal Reserve, former vice chair, she was on with this last hour, and she was basically saying, hey, the employment picture's improved, the job market has gotten better, we can certainly absorb a quarter point or whatever it may be, even more than that down the line, and we're at that point. We're ready to do it. It's been telegraphed, and it's not going to lead to something catastrophic. But you say it might.
Well, I don't know if a 1/4% interest rate increase will lead to something catastrophic immediately, although obviously in December that's part of what caused the January crash or collapse. But what I would say is that the fact that we're focused still on a 1/4% rate hike is not hurting the economy or the stock market. It should tell you something. It's like when Barron says, well, this stock market's not ready to crash yet.
Right.
We haven't had a ton of good news, and even a bubble economy, even a bubble market needs something real to go up on. Earnings have not been good. Yeah, the economy's not been bad, but you'd hardly call it good.
Interesting point about bubble. I mean, because again, to go back to somebody we talked to earlier, Bob Schiller was on a few minutes ago, as a matter of fact, and we started to have that conversation. I don't think we finished it, but we started to have that conversation about bubbles in the housing market and developing in certain areas. And he mentioned out west and parts of the Pacific Northwest as being areas where there's certainly some concern. So is that something that you're saying concerns you as well?
Well, I would say so, and it seems like I've heard that before, and Bob Schiller I think very highly of, but you got to remember, I think it was Alan Greenspan who says, don't worry about the housing market, there's a little froth on the coasts, only the coast. Right.
Well, I mean, I think some people are saying, boy, don't tell me we're doing this again, right? So.
Well, no two bubbles pop exactly alike by any means. I don't think when this housing market bubble pops, it's going to look like 2008. It's different in nature. It's different that the federal government has come in and taken over basically the entire mortgage market. Almost all mortgages are now backed by the federal government. So it's a different situation. It's more, when it goes down, it's part of a much broader pop. It won't be just a housing bubble by any means. It'll affect stock market, bond market. In fact, I think it'll be the stock market that leads, not the housing market. All
right, we have to run now, but we appreciate your viewpoint, Bob Wiedemer. I think we could probably have an argument over crash versus sell-off versus downturn, which is which, but that being said.
We'll see. Come back in a few months.
Thanks a lot. Well, be here. I'm not going anywhere. Thanks, Bob Wiedemer, with us and talking about a market that